My name is Shihab Khalil. I'm the founder and CEO of ZagTrader. We're a UAE-based firm set up in 2009, and we've been focusing our attention onto the capital markets industry for quite some time, which is quite diverse, as you can imagine. And we serve lots of clients, whether they're exchanges, brokerage companies, asset management companies, and portfolio management, robo-advisory, market making, a lot of stuff. For today's session, I'll be speaking specifically on the crypto assets world, which is the buzzword of the industry, as you all know. Lots of debate has been happening on it, but I'm trying to focus my attention and my team on moving our platform into providing some information and insight onto this ultra-luring, opportunistically available industry where we've been able to harness the lots of years of experience that we've been focusing onto the equities and the other matters into this industry. So for starters, I'd like to share with you something about the platform. A platform is all web-based. It has front end, middle office, back office, integrated accounting, everything you would need to have in a single platform. It's a framework that an asset management can work on and to offer global exposure to their clients. We've integrated this to global data vendors, information vendors, research, and so forth. But as I mentioned, for today's session, I could be talking for so many hours. I've got 5 minutes remaining, so I'll be initially focusing onto the problems of this industry, the cryptocurrency industry. Lots of exchanges forming up for the same security. Data is scattered. Lots of clients have to go straight into the exchanges themselves. The financial institutions, they've got regulatory problems to deal with initially. You've got the professional users who cannot wait and trade, and I've heard while I was in the backstage, some few of you do trade. They couldn't wait and go straight into these exchanges themselves. And because there are so many different exchanges out there already, arbitrage opportunities arise. And for the ones who don't understand what arbitrage is, buying something at a cheaper price and selling it immediately at a more expensive price at the same time gives you the price difference. And this is what happens when you have technology on your side that continuously monitors the markets 24/7. And when a problem happens in the markets and a gap happens, you'll be able to view these opportunities. So let me share with you something related to the platform in general. So for this session as well, we'll be focusing on two specific exchanges. One of them is called Binance or Binance. I'm not sure how the founders have spelled that, and Bitfinex. And both of those exchanges have various assets listings under them. So you've got Binance and you've got Bitfinex and so forth. So for the most popular one, we will be focusing on today's session on the BTC USD, which is the Bitcoin itself, the one that started it all. We've taken a different perspective on how to deal with this. We've taken, since we have the back end and the accounting modules into the platform, we've created a currency in our platform, called it the BTC currency. And the financial institutions will be able to use that BTC as a currency instead of a digital asset. It's a debate, an asset. ICOs are happening all around us. For various regions, you could be buying the tokens for that matter. But BTC, in my opinion, it's been derived from the demand. The scope of it is basically related to the demand and the remittances. So once we create a BTC, it allows you to begin to interfacing to these exchanges. So we've integrated Bitfinex, as I mentioned, and other exchanges. We created a new dashboard that we've created these securitized symbols ourselves. So we created spreads. All of these are symbols. We created them out of thin air. And these are spreads between X versus Y in various exchanges. And we've created certain ratios, the price of Bitcoin to gold, price of Bitcoin to silver, gold to crude, etc. These ratios will help us in understanding the rubber band effect sometimes. We know this is a normal ratio. When something really wrong happens, it's immediately going to pop back up sooner or later. And all of these ratios are now chartable as well. One important element that I want to take a look at here is to zoom in into these four securities that I just chose to handpick for you today. These are 4 arbitrage-enabled securities that we created. When you buy one of them, automatically the platform, using our execution management capabilities, will actually place a buy order on one exchange and a sell order onto the other exchange instantly. And you'll be able to buy the security, the same security on two different exchanges and sell it. So if we take a look at these ratios here, you should be a buyer if it's less than 1, and you should be a seller if it's above 1. And let me show you some different charts of how these things look like. This is like the normal gold chart. This is the I'mar properties chart. But this is an uncommon chart. This is representing the price difference between the same security in multiple exchanges at the same time. If you notice, early this morning, I was even taking a quick look at it, there were genuine opportunities where if it falls under the 1, which is right above here, this is where both exchanges, in this example, have the prices really close to each other. But if you had an automated way of capturing this and this into an opportunity, then you would be able to. To simply buy it, either I was just going to do it over the chart itself. So can I buy it? It's very tight, but I can still buy it. So I just want to buy 1 Bitcoin at market, and I have the funds for that, and the order is being processed, and the order has been placed successfully. If you noticed, I've got suddenly placed a buy order on one exchange and a sell order on another exchange. Both exchanges have confirmed the tickets, and I have just been able to buy at 396 and sell it at 401. So the difference is mine. Now, obviously, you need to take commissions into consideration and cash settlements and withdrawals into consideration. The tights for this example are extremely tight. I wouldn't be buying it myself, but we've got algos that even using the technology of ours where you can trade TWAP, VWAP, and a few other market-making principles, where if you applied some of those opportunities for an automated robot, that they can actually trade those while you're asleep. So this is where it ends today.